Thanks, Nina, and thanks for inviting me here. I'm going to talk about three main things today. My basic message is that high-quality services require a more realistic understanding of taxpayer behaviour. Three main aspects to this. I think we need to think a bit more about how we can enhance the vast amount of existing communications that taxpayer administrations have with taxpayers. If you consider that every interaction will influence behaviour in some way, do we know enough about the possibly unintended consequences of how administrations are talking to or interacting with taxpayers? And what are the ways that potentially we could improve those communications? Secondly, what about some new channels for contacting taxpayers? Certainly, from my experience in the UK Tax Authority, there was a strong emphasis on written communication. Everything had to be a letter. But what are the potential ways that we could maybe preserve high-quality services at lower cost by using new channels of communicating that cost much less, but potentially have the same or better outcomes? And then finally, if we are thinking about online much more, if we are going to move to online because it's potentially cheaper, what do we know about how people's behaviour differs online? What do we do differently? How do we process information differently online? I'm conscious that I don't want to talk for too long, so that last one I may come back to in the discussion. Now, in terms of enhancing existing communications, what I want to give you here is an example of how this was done in the UK. So I spent two and a bit years in the UK Tax Authority. I now work for what was part of the UK government called the Behavioural Insights Team, sometimes called the Nudge Unit. And what we did here was we looked at an existing letter which is sent out very often. It's the letter the UK Tax Authority sends you if you haven't paid your tax on time. We generally think that sending a letter is probably the most appropriate way of trying to chase this debt. Now, what you see on the left of your screens is the letter, and you may not be able to read it at this distance, but it's the letter that certainly the UK Tax Authority was sending out in 2013. And it is already quite short, because when I came into doing this task, it was 24 lines long. By this point, it was 4 lines long, and it was more effective. There's a whole load of stuff that we were just putting in that letter because we always had and because we felt it was the right thing to do. But in fact, it was confusing and it was unnecessary. But that's not what I'm going to talk about, because what you have on the left here is the letter which had already been made simpler. But what's interesting is I then ran a series of randomized trials to find out what affects behaviour. So what phrases in that letter might actually affect taxpayer behaviour? Not, in a focus group saying, I don't like that letter, or that letter makes me feel good, but actually makes a difference in real-world situations. So what you can see here is that the only thing that was varied between letters, so people randomly allocated to get one letter or another, was a single phrase or single sentence. In this instance, it says it's a warning for interest charges. The letter itself, I won't go through it in much detail, just says you owe some tax, this is how to pay it. Now, what I did basically was test a whole load of things. Now, the point is, if you only vary that one phrase, then you know that is what is accounting for any increase in payment rates. So if people get one letter and they pay a higher rate, that's because of that phrase. I'm not going to go through all these messages. I haven't put the slide up to communicate those. What I want to focus on is the two in red at the bottom, because I think they're most relevant to the topic of this conference. And they're an interesting comparison, because one of them says how you can pay. Just give more information about means of payment. So it says you can pay by debit card, credit card, or direct debit. You can also pay using internet telephone banking. Here's more information on how to pay. If you don't believe this payment is overdue, please contact us on the number above. In other words, it's information that's meant to be there to help people to comply. Different modes of payment, where you can get more information. The other thing that is circled in red just says, we are charging you interest on this amount. Okay, so it's pointing out that you're being charged interest. And there's quite an interesting comparison there because obviously one is a more sort of service-orientated approach and the other is perhaps a more traditional deterrence approach. Lots of other things tested. Above that, social norms. I can go into that in a different presentation. So what you see is, do people behave differently as a result of getting a letter with one line different or another? So what you've got here is on the left, what happens if people get the control letter, that is the letter with no additional phrase, just the basic information. And then on the right you have what happens if you add in more information about how to pay, and then if you have a warning of interest charges. And what I think is quite interesting here is that there is a significant increase in payments. This is payments at 23 days after the letter was issued. I can go into the reason why it's 23 days some other time. But there is no significant difference between the additional information or warning of interest, which is interesting because if you're, perhaps a classical economist, you'd say, well, just warn people of interest charges. That is what they will respond to. But what people also respond to is some clarifying, helpful information, and that actually increases payment rates. So in terms of the topic of this conference, we can talk about, we know that adding in a certain amount of information in this way can increase compliance. I have another trial I won't go into that also lists call center times, increases payment rates by about 2.2 percentage points off a low base. The important thing I want to draw to your attention is we only know this because we ran a trial, because there was some form of experimentation, adaptation, and learning. Now, if you think about how many millions of letters are sent out through tax authorities and how a 3 percentage point increase in response rates could be quite helpful, and actually it doesn't really cost anything more to write one thing or the other. Now, I recognize there may be people calling your call center, there's a cost there, but sometimes there is no cost. Why not try to experiment to find out what difference can be made to behavior through small changes to the high volume of communications the tax authorities are sending out? Very quickly, I won't go into much detail, these are fairly substantial effects in some other respects. So what this graph shows is the same kind of results for the trial I mentioned, but along the bottom you see how many days earlier people paid. So how much earlier we could shift payments by these messages. And all I want to point out is that if you look at the bars in green, they refer to the effect of other factors like being older, having an accountant, having a recent debt. And so what you see here is that there's a gender effect, so women pay sooner. But if you then look at things like it's well known in the literature. If you look at things like the more information line there, which I showed you, it's roughly the same size as the gender effect. Okay? So we're, in some ways, fairly substantial effects through small phrases have the same effect as the overall effect of being one gender or the other, or indeed earning £10,000 or more or less. I'm now going to talk very quickly about the second thing in terms of other channels. So we can talk about letters, but what about SMS? It seems a fairly obvious thing to try. Unfortunately, one thing you'll find is that it's very difficult for authorities to keep up-to-date records for SMS. So what we have here is when we try to do a preemptive reminder trial. And what this is about is you can see in the data if some people have been late paying their tax. And all the experiment was, can we remind them before the deadline? To say, the deadline's coming up, you missed it before, you can avoid fines by paying now. And the experiment, is split into two because in some instances we don't have a mobile number. In some instances we just have the address. Okay, so what I'm going to do initially is talk about the letters. And what we did was we found three groups. So one group is called here new debtors. These are the people who've entered the tax system. I'm talking about income tax, by the way, here. They've entered the system and they've immediately been late. Okay? And there's a plausible case here that they have been late because they didn't really understand their duties properly. Okay? The second group is people who have been repeatedly late over quite a few years. Now, the idea here is that you might change your behavior by pointing out to them that you've noted that they're repeatedly late. It hasn't gone under the radar. And the third group, which I think is quite an interesting group, is a group of taxpayers who've been late, and the last time they were on time. So the idea here is, can you reinforce that change in behavior and prevent them from going back to being late? In this experiment, that's exactly what it did. So the new debtors got an educational message explaining how to get it right. The people who had been late repeatedly had a monitoring message saying we'd noticed past non-compliance. And if you like, the reform group said, thanks for complying. Can you keep doing that, please? These are the results, these are for letters, remember. So what this graph shows is that for all the groups, we have a fairly consistent increase of around 3 percentage points on, firstly, on-time payment, but then also the effect 3 months after the deadline. So the effect is maintained 3 months later. And that's interesting because that suggests that the tax authority can save money on any kind of enforcement action through this preemptive reminder. Because the obvious objection would be there's a dead weight here, people were going to comply anyway. So you need a fairly useful effect to make it worthwhile. Of course, people, these are groups who we know already often non-compliant, but the point remains. Okay, so what about SMS? So the context here is that SMS costs about 10 times less than sending a letter. So there's an obvious saving. With SMS, because it was cheaper, you could try more things. So we actually looked at the difference between a standard preemptive reminder, the same 3 groups, remember, which just said the deadline is coming up. And then the additional thing we tried was, the feedback element. So we said, is it just a reminder or is it the personalized feedback reminder that is doing the work? Well, the interesting thing here is that for 2 out of the 3 groups, the messages had no effect. Right? So there was no increase in compliance at all, which of course is different from the letters. Now, we can't directly compare the two because the person who hasn't given a mobile number may be different from the kind of person who has. But it is worth noting that there's some evidence that SMS may be less effective than lesser compliance. And possibly, I'm speculating here, that's because people are used to letters from the tax authority and they're seen as more official. What we do see is, interestingly, for the group who had been repeatedly late, so you would think this is the group who are most difficult to influence, we see a significant increase just from a standard reminder, and then also an increase from the feedback. And there is just about a significant difference between the standard and feedback reminders. So SMS can make a difference, but you could speculate that the effect size is smaller, but on the other hand, they're much cheaper. So these are the kind of trade-offs that I think tax authorities need to be making, but I think they should be making on the basis of what is the behavioral effect of the things they're doing. I won't go into online behavior right now, but we ran an interesting trial on this as well. In conclusion, we have a framework we developed on the basis of behavioral science around making things easy, attractive, social, and timely. You can get it on our website. I think that's what tax administration should be looking at to try and maintain services while reducing costs. Thank you.
All right, so here we are looking at notice behavior, and we'll come back to the online issue during the question period. Our next speaker is Sebastian Beer, and he's the country economist for the Austrian National Bank here in Vienna. And he's going to talk about, I think, the impact of complexity on taxpayer knowledge and compliance behavior. So.
Mr. Mouse?
All right, so
Hello, I'm here today not in my role as an economist for the central bank, so the usual disclaimer applies. And I'd like to present some work which I did together with Matthias Kasper, who's here today, and Jan Löbrig, who's not here. And in this work, we were trying to find out what's the impact of complexity in tax law. And I recognized that in almost each of the presentation that we've heard today, somebody talked about complexity and its negative effects on different things. So if you look into psychological research, right, and I'd like to mention that this research was conducted in an interdisciplinary team. So Matthias is a psychologist, I'm an economist, and with Jan we had a very policy-oriented member in this team. If you look into, maybe I get a full screen. Yeah. If you look into psychological research, you find that it requires between 12 and 17 years of education in order to understand the tax code. However, most people are not educated for this period of time, but rather 10 years, which means that there's a lot of misunderstanding and a feeling of incompetence when it comes to tax law. Does this matter? Well, the result is that a lot of money is spent on tax preparers, first of all, which might not be too bad. But on the other hand, it also means that a lot of hours of work are spent for compliance. So the Taxpayer advocate estimated that around 6.1 billion hours are spent a year in the US for tax compliance. And if you then translate this into real wages, then you come up with a stunning figure of 15% of aggregate income tax receipts. But complexity does not only raise real costs, but it also makes tax policy less targeted. So the earned income tax credit, for instance, is designed in order to incentivize work by low-income families in the US. But as a matter of fact, many families who were entitled to this type of credit do not claim it, and a lot of people who are actually not entitled do claim it. And therefore, this policy does not really effectively do what it is aimed at, which is incentivize work. Now, why is this? Why do we have so much complexity if there are negative consequences affected with it? The easy answer is, from a legal perspective, because we want to have a fair tax system. If we want to acknowledge that people are in different situations, we need to apply different rates and we need to have deductions in order to have a fair tax system. But also from an economics perspective, it's actually good to have some degrees of freedom in the tax system. If you can take care of different elasticities of behavior, you want to tax housing, for instance, differently than work. But all those different rates and structures then create a lot of complexity, which has negative impact. And if you think about it, actually, in theory, those degrees of freedom are quite good because you can achieve different things with it. And where the problem really arises is during implementation. Now, in this paper, we were looking at one specific aspect of complexity, which is its impact on tax evasion. Now, depending on your profession, you might have different hypotheses on the correlation between complexity and evasion. As a psychologist, one could argue that it's very important that you have trust, and we've heard this today, that you trust the government and that you trust the tax administration. Now, if you introduce a lot of complexity, this might disengage taxpayers. If they do not understand what's required of them, this might breed distrust and therefore have a negative effect on compliance. From an economist's perspective, complexity is very closely related to uncertainty. So if you are in a very complex situation, you might not know what's the right solution, and therefore complexity means there's more risk. And the only way you can escape this risk is by increasing your compliance. So if you do not evade anything, then there's no problem. But the problem in practice, of course, is that this might result in over-compliance, because if you don't know what the right tax base is, and then as a result, you might be over-compliant. And lastly, from a practitioner's point of view, we often heard that complexity is actually a pretense to justify evasion. Complexity doesn't really exist, but if you have a very complex tax system, then people can exploit it by saying, no, I didn't really know that those are the rules, and this is why I didn't pay enough. So we try to find out what the right hypothesis is, and we chose an experiment in order to test those hypotheses. And an experiment is very suited for this particular situation because, as I just mentioned, complexity has so many facets. So a complex tax system might be fairer and might be more efficient, but has still very poor policy outcomes. And in order to keep those other factors constant, we invited people to a laboratory and had them play a game, a tax game, where they get income, they learn the rules of the game, which normally means they know their tax obligation. And then they can decide whether to pay their taxes in full or not. But we introduced a little tweak into this game, which was that we said, look, there's amount which you can deduct. But we won't say specifically the magnitude that you are allowed to deduct, but rather, here's a puzzle, and if you find the right solution, then you will know what the tax base is. Otherwise, you have to guess, basically. And here's a quick sketch of the experimental design. So it actually ran into 4 stages. In the first stage, the subjects were presented with a puzzle. They then had to indicate a solution, and depending on whether they solved the puzzle or not, they learned what the right amount is. And finally, there was also some chance that they were being audited, and if they were found non-compliant, they had to pay a fine. And in those type of experiments, there's incentive to be rational in your behavior, which is that your payoff, so you get money for participating in the experiment, and this payoff is related to your performance in this game. Here's a picture of those puzzles, and better not try to solve it because then you're distracted for the end of the presentation. But it's just to give you, a clue of what it looked like. And we actually used a psychological test, a visual perception test, and there are very easy items and very difficult items. And the advantage of this kind of test is that it has a very objective operationalization of complexity, because it's based on item response theory, which says complexity or the probability of solving this type of puzzle depends on 2 things. First of all, the complexity of the puzzle and your personal ability. And I think that this has a very nice resemblance in real life, because tax law complexity is not one thing which is the same for everyone, but it very much depends on education, on your profession, on your background, whether you find a situation complex or not. Now, the interesting result actually was, I'm sorry about the table, I didn't know that it's mostly non-economists here. But the results show that if you increase complexity, then people pay more. So it seems like this hypothesis that complexity introduces uncertainty, people try to escape it by being over-compliant. We found some evidence for this hypothesis here. And we also asked people, how certain are you that you actually found the right solution? And interestingly, those subjects who tended to be non-compliant said that they were not so sure if they really had figured it out. But those, so you see this here in the blue, in the second line, which is now blue. But this effect vanishes if we introduce then fixed effects, which means that we took care of personality traits, you could say. I think that this research, which is very quickly summarized in those 12 minutes, which I had, has some interesting implications. So we found that complexity actually increases reported income in the laboratory. And this could be used in order to justify why the status quo. So in the present moment, we have very complex tax systems, And the results indicate that this could actually be good for tax revenue. But I think one important message also from this results is that complexity is a very subjective concept. And if you introduce complexity in the tax system, this will impact people differently depending on many different factors, like education, for instance. And therefore, I do not think that it's actually a good thing to have very complex tax systems, because it will result in over-compliance and has very negative distributional consequences. As a last point to close the circle and come back to where we are in this panel, which is declining budgets of tax revenues, of tax administrations, I think it's important to keep focused on outreach and education, because if you do not inform people what the rules are of the game, then this will impact negatively, especially on low-income households, and this will have negative distributional consequences which are not intended. Thanks.
So, building on that presentation, we're going to hear from Matthias Kasper, who is an assistant professor at the University of Vienna, in Vienna, Austria. And Matthias is also going to talk about some survey work exploring all sorts of different characteristics, particularly with self-employed taxpayers in Austria and Germany, I think. And this sort of builds on, you also have to look at the characteristics of the taxpayer to understand the impact on tax morale and compliance. So Matthias.
All right, thanks, Nina. I think my talk now is a nice response to Sebastian's presentation, and I would like to tell you a bit more about the dynamics between tax system complexity, tax knowledge, and people's attitudes towards compliance, or willingness to comply. So, what we've heard so far, and I think this doesn't come as a surprise to most of you, that relatively few taxpayers feel competent to do their taxes. And we've also learned from Sebastian's talk that complexity might compromise fairness aspirations, and that it also might discriminate against less educated taxpayers. But the effects of complexity, as Sebastian pointed out, do not only depend on the characteristics of the tax system, but also on taxpayers' knowledge and taxpayers' ability to understand what they're supposed to do and what the authorities expect from them. And there is indication suggesting that increasing tax knowledge actually elevates fairness perspectives, fairness perceptions. So it seems to be the case that the more people know, the more they perceive the system as being fair. But there's also a substantial body of evidence indicating that tax knowledge also impacts on the willingness to comply. So some of the people in the room here looked at which factors drive taxpayers' knowledge and understanding of the system, and they found that the more experienced taxpayers are, the more often they have gone through that process of filing their taxes, the more willing they are to accept their tax obligations. And studies from several different countries suggest that knowledge impacts on taxpayers' attitudes towards compliance or to evasion, on the other hand. Some work by Eric, who's here in the audience today, suggests that tax knowledge is correlated with tax morale. So not only that behavioral intention seems to change, but also people's general attitudes towards compliance. And some evidence from the US finally indicates that the 86 tax reform, and one of the main goals of that reform, at least to my understanding, was to simplify the system, reduced the acceptance of tax cheating. Now, what I'm going to present here today is survey data from a broad variety of countries. In the first study, this has been collected over the last 5 years or so, we were looking at a very, very substantial amount of taxpayers from 14 Central European countries. So most of them with communists, Soviet Union history clearly. But the interesting thing here is that it's a representative sample. So those 22,000 people we interviewed, or not we, but that were interviewed by survey firms, are a very nice cross-section of the population of those some 10 million taxpayers in those Eastern European countries. And what I'm going only to give you a very brief insight into all those different dimensions we asked them about. But what I would like to share with you today is the results we observed regarding the correlates of tax law complexity. And so as you can see here, many taxpayers who perceive, or most taxpayers who perceive the system to be very complex, so who indicated that they find it very tough to comply with their filing obligations, for instance, also believe that a lot of public funds are wasted. And relating nicely to what we've learned from Sebastian, they also indicated that they had been non-compliant in the past. And I think this might be some additional perspective on complexity being used as an argument to justify evasion. So if you have a large gray area and you don't really know what the right thing to do is, it's relatively easy for you to say, well, I didn't really know what to do, so I decided in my favor as opposed to the state's favor. But on the other hand, we can also see here that perceived tax system complexity correlates to a lot of negative things or perceptions that we, of course, do not want to have. So people are less satisfied with the tax system when they perceive it to be complex. They perceive fairness to be lower. They are less motivated to comply. And importantly, and Sebastian touched upon that just like many of you in earlier sessions, they also indicate less trust in the state and its institutions. So it seems to be the case that the harder taxpayers find it to understand the features of the tax system, the less they trust in the states and also in tax authorities. And now linking this to taxpayers' understanding of the law, we conducted a survey study among German and Austrian self-employed taxpayers over the last month, actually. So this is very recent data, and we just started looking into that, and I've been working on that with my colleague from Vienna here and from Tilburg. And what we were interested in here was to find out how taxpayers' knowledge, self-employed taxpayers' knowledge, shapes their attitudes towards compliance. And what we find here when we look at this slide, we see the picture pretty much changes. So it seems to be the case, the more people know about the tax system, the more positive their attitudes are. So they exhibit higher degrees, for instance, in mental accounting, which means they're better at keeping track of their revenues and expenses, and they have a better understanding of how much taxes they owe and when they're supposed to make their tax payments. Interestingly, but not very surprisingly, it also relates to financial literacy. So education, general education, understanding of simple economic and mathematical relationships seem to impact positively on taxpayers' understanding of the system. And finally, it also has positive effects on people's internal motivations to comply. So those people who know a lot about the system and who understand how it works are rather willing to comply because they believe it's doing the right thing. So they rather accept the fact that all of us need to pay taxes in order to contribute to a well-working society, as opposed to those taxpayers who say, well, actually, I don't know a lot about my tax obligation, and those people reported to feel more enforced to comply on the other end. And we also found that self-employed taxpayers who stated they were not really literate in terms of taxes were more likely to indicate that they had evaded taxes in the past. Now, what can we learn from that? And I think I'm rushing it a bit, but we have some more time. Yeah, some time for the summary here. So it seems to be the case that both of those dimensions have important compliance indications. So on the one hand, perceived tax law complexity seems to be connected to a lot of undesirable outcomes. So the more complex people find the system, the less satisfied they are, and also the less satisfied they are with the quality of taxpayer assistance. And I think this makes a lot of sense, right? I mean, what authorities are there for, at least in part, is to facilitate compliance. Now, if taxpayers believe they have no clue about what they're supposed to do, then they're more likely to say that they're not really happy with the job administrations are doing. On the other hand, and I think this makes a lot of sense from a societal perspective as well, those taxpayers indicated less perceived fairness and also seem to trust institutions much less than taxpayers who have a sound understanding of how the tax system works. On the other hand, again, among taxpayers with high tax knowledge, we found that attitudes towards taxation in general are more positive, and they also exhibited more better abilities to comply with their tax obligations. And I didn't want to bother you with the too technical analysis here, but of course we also did some regression analysis trying to predict which factors contribute to subjects' tax knowledge. And we found that apart from formal education, experience seems to matter. So the more often you have gone through the process of filing your taxes, the higher people scored on tax knowledge. Now, what can we learn from that? What does this tell you? I think on the one hand, and we briefly heard about that before, it does make sense to strive for simplification. And I think no one really disagrees that it's desirable to have a simpler tax system. But on the other hand, if we want to change taxpayers' attitudes towards the system, we should also try to increase compliance, to increase taxpayers' knowledge. And in order to achieve this, I think we should not only focus our debate on multinationals, and I think it's a very good idea to launch all these cooperative compliance programs, for instance, but we should also shift our attention towards small and medium enterprises who often have a very hard time complying with their obligations, particularly in the first year. So when people open a restaurant, they think about business success and how, what kind of menu they would like to serve, but they probably don't think so much about what are their tax obligations that come along with their new business. So we should not forget about them. And with regard to startups, very, very young enterprises, I think one interesting perspective would be to think about more formalization in terms of tax knowledge. So if we try to educate young taxpayers who are willing to start a business, I think this not only has revenue implications, but also impacts on business effects. And this is my final point. I think particularly in times of restricted budgets for tax administrations, evaluation does make a lot of sense. And it's important to understand what the provision of taxpayer services does to enterprises, not only from a revenue perspective, but I think it's also very likely that particularly small and medium enterprises will benefit in terms of business success. So I encourage you to look into ways to assess the implications of providing services on those dimensions. Thank you.
Okay, so that was tall. So our last paper is going to be presented by Les Book. I need to bring it down even more, look at that. Who is a professor of law at Villanova University Law School in Villanova, Pennsylvania. And Les is going to talk about tax complexity in terms of, I would say, a particular group of taxpayers where we just heard about small and medium enterprises. We're going to hear about low-income taxpayers and some of the issues that come up with low-income taxpayers dealing with a particularly complex provision in the United States. So Les.
Thank you very much, Nina. And thanks so much for the opportunity to be here and for the organizers for putting on really a terrific conference today, and looking forward to tomorrow as well. As Nina mentioned, I'm going to be talking about some specific aspects of U.S. tax administration. And in the interest of leveling the field, I'm going to spend about a minute or so on some history, and then get into where we are today and where the future, what the future might hold. And so, briefly, the U.S. tax system has been marked by some significant changes in terms of individual policies relating to individuals, in particular low-income people. And it started mainly in the 80s and continued through the 90s, where there had been significant cutbacks in means-based transfer programs outside the tax system. So there was a shift, major legislation reforming welfare. Lots of benefits started to become administered through our tax system, similar to other systems as well internationally, but I think to an even greater extent. So, and I'll be talking about one particular provision, the Earned Income Tax Credit, which Sebastian mentioned as well in his presentation, and some of the implications of delivering that benefit. Secondly, as part of or connected to the shift in delivering benefits to the tax system, there was an increased recognition of the importance of taxpayer rights for those lower income and moderate income individuals who were being thrust into the tax system in a way that they previously were not. And that in part reflects some of the strengthening of the office in which Nina presides, but also reflects some of the work that Nina did prior to her time as National Taxpayer Advocate. Because I guess it's about 20 years ago today, or around today, when there were hearings concerning the possibility of funding for low-income taxpayer clinics, which Nina, prior to her time at National Taxpayer Advocate, was a director of a tax clinic. And tax clinics in the U.S. are supported by federal funds, and they work with lower-income taxpayers who have disputes with the IRS. And that circles back to me, and for about 10 years, I was director of a low-income taxpayer clinic at university, and have written a lot about the issues that spin from the intersection of low-income taxpayers and the IRS. So what I'm going to talk about today is one particular aspect of the IRS's social policy agenda, which is administering the Earned Income Tax Credit. And the Earned Income Tax Credit is a refundable credit which allows for a refund up to around $6,500 for families with 3 or more children. It's based primarily on the presence of children living in a household plus earned income. And to give it a small indication of how important it is, in 2014, about 27.5 million taxpayers received close to $67 billion in earned income tax credits. It's become one of the largest federally administered means-based anti-poverty programs in the U.S. And it's a major part of the way in which our system incentivizes low-wage work and combats poverty. And what I'm going to talk about in thinking about taxpayer rights in today's time is really the fact that there are 2 somewhat competing narratives that typify the way in which the Earned Income Tax Credit is viewed. In narrative A, you have this notion of the U.S. has clearly de-emphasized much of the federal safety net outside of the tax system. And the IRS has become a steward and, in fact, a key deliverer of one of the nation's most important means-based anti-poverty programs. And it has generally received bipartisan support, and IRS has been noted for its remarkably efficient delivery of those benefits in terms of comparisons with other federal organizations which have administered non-tax-based benefits. And while working with the private sector, the IRS, including the return preparer industry and software providers, has helped shepherd the shift to e-filing in the U.S. tax system, and it has moved people away from stigmatizing receipt of benefits through welfare offices and intrusive caseworker eligibility screenings. And really, narrative A highlights the positive role of the IRS in lifting people out of poverty, encouraging a return to work, and providing the means for essential consumer purchases, and transmitting the tax system into one in which tax time is often associated with the receipt of a substantial refund rather than the payment of proceeds for many lower income or moderate income Americans. That's not the complete picture, however, and narrative B is part of the equation, and this narrative is completely different, and it focuses on the negative, and it goes like this. It says essentially that part of what makes narrative A so compelling is it's also contributing to the earned income tax credit and refundable credits generally being riddled with fraud, errors, and overpayments that exceed the reported amount rates in other non-tax-based, means-based benefits programs, such as food stamps and traditional welfare. And in relying on the tax system's self-attesting process that does not have, as I mentioned, intrusive eligibility screenings, and by tethering the eligibility to the credit to items that may not be known to the IRS at the time a tax return is filed, the IRS has major challenges in maintaining program integrity. And individuals, so this narrative goes, some on their own and others acting in concert with illicit tax preparers, are essentially responsible for an improper payment rate that is around 24%, which amounts to about $15.6 billion in improper payments, and placing the IRS at or near the top of agencies that, again, as the narrative frames it, squanders precious federal resources on ineligible recipients. And compounding that challenge is under our law, agencies that have excessive improper payments have to come forward annually with a mea culpa, indicating all that's gone wrong and a plan for what will go right in the future. And well, of course, as with any narrative, this is these pictures somewhat miss the complexity of the real world, and surely one paragraph summaries can't do justice to the real picture. But I believe, and this is the main part of my talk today, that the IRS's administration of the Earned Income Tax Credit is really plagued by an agency unwilling to embrace some of the essential truths of narrative A. And at times, a narrow-minded focus on viewing coercive compliance measures, such as audits and penalties, as the sole or even primary solution to the problems that are associated with narrative B. So I'm going to highlight the importance and implication of the United States government's fully embracing some of the essential truths that spin off the first narrative and the dangers that are associated with too narrow a focus on a sanction and coercive-based approach to compliance that comes from narrative B. So there have been few those at IRS and in the Academy who have really embraced the role of the IRS as a benefits disbursements agency, and the National Taxpayer Advocate has been one of those, and she has repeatedly in her annual reports noted that the IRS is failing to embrace its role as a benefits agency contributes to the IRS and Congress unduly focusing on compliance and coercion. And it contributes to an enforcement-minded compliance approach that is not suitable for the characteristics of this taxpayer population. And I'll talk more about that. It's also not fully reflective of insights that other agencies and scholars have identified as possible levers to increase compliance in the first instance. And moreover, it really contributes to a failure to understand the challenges that the people who want to or claiming the credit experience. So part of this, I think, part of the solution goes to hiring and training employees who would really embrace this mission, and it requires a sensitivity to a skill set that is different from those employees who embrace a narrative that has a focus on narrative B. And so employees who come in and self-identify and whose agency explicitly recognizes and embraces a role as a benefits deliverer can make a real material difference in not only outcomes, but the taxpayer experiences in connecting with the agency as well, so essential to trust and voluntary compliance, as we've been speaking about today. It allows as well for a potential deeper understanding of the limitations and perspectives of the very people whose lives are part of the broader tapestry that our agency sometimes misses in its current approach. So I think it's crucial to consider insights from those outside the tax arena in thinking about administration. So consider comments by Professor Kristen Seefeld, who's a scholar at the Schools of Social Work and Public Policy, University of Michigan, who authored a recent book called Abandoned Families, Social Isolation in the 21st Century. And she spent 6 years interviewing low-income women in the Detroit metropolitan area who have faced underemployment and unemployment, economic and residential segregation, and barriers to accessing help. And these are the same women who are, in essence, the intended beneficiaries of the Earned Income Tax Credit. And the book is a moving account of some of the day-to-day challenges that these working poor in America face. And I could go on, but I'll quote briefly from her recent book, which Professor Seefeld states that I found that the programs that are supposed to help during the tough times cannot always be counted upon. Obtaining benefits often entailed fighting with lawyers, employers, and bureaucrats. Welfare caseworkers repeatedly made mistakes that caused disruptions to benefits that had been difficult to obtain in the first place. Delays in receiving benefits or not receiving benefits at all contributed to a great deal of hardship for the women in these families. And I could talk more about the challenges that Earned Income Tax Credit and lower income taxpayers face generally in navigating the IRS's eligibility and compliance gauntlet. I note that some of the research that the National Taxpayer Advocate has done in this space confirms the experience of those that dealt with the IRS in attempting to verify eligibility for the Earned Income Tax Credit. And they would be right at home in Professor Seefeld's study. And consider some of what we learned from prior research that has been part of a past annual report in which the National Taxpayer Advocate has studied the experiences of individuals who were involved in the IRS's audit process. More than 1/4 of taxpayers who were undergoing an audit for Earned Income Tax Credit had no idea that the IRS is even auditing their tax return. Less than 1/3 of the audited taxpayers thought that the IRS audit notification letter was easy to understand. More than half of the audited taxpayers had difficulty obtaining documents that the IRS requested, and more than 70% of the taxpayers had a preference for communicating with the IRS in a form other than correspondence. And simply put, the IRS is one of many sources of hardship that the working poor have to navigate, and many cannot. And proposals to ensure that there's a single point of contact with the IRS who would have responsibility for communicating with an audited taxpayer would reflect the realities Professor Seefeld and the National Taxpayer Advocate have documented. Allowing simplified ways to document and correspond with the IRS would have a significant impact on taxpayer experience and I suspect compliance in the long run. And it leads to, and again, I'll just touch on, we could spend a significant time on digital communication and the shift towards the IRS's intention to shift towards a more assertive self-help model of the ways in which the IRS and taxpayers communicate. And a tax administration that recognizes that a model of communicating that is principally based on self-help, simply put, will not work equally well for segments of taxpayers that face literacy and language barriers and have access to broadband issues that is just part and parcel of the experience of lower income Americans. And add to the mix, this is, I think, extremely significant, the current events in our country with a more aggressive enforcement of immigration laws, and it is likely that people now even have more cause to be wary of and perhaps distrustful of our government. That distrust complicates the IRS's job. For as many Americans, fear of the IRS is already a given, and the IRS is for many the most salient representative of our federal government. I could spend more time on compliance aspect. I do want to just mention one aspect of hope for improvement, and builds on some of the comments and thoughts that one of our earlier panels and Rick and Alice mentioned earlier today. So we've spoken about before the IRS's adoption of a Taxpayer Bill of Rights and the codification of that Bill of Rights in 2015. And one of the things which is interesting is this notion of and in fact, this came up in Alice and Rick's talk, this notion of lack of a specific remedy. And many of our rights are not attached with, at least in the specific rights provisions enacted, a specific remedy that taxpayers can attach themselves to. And as Adley mentioned in his talk, I think that the focus on rights, especially for lower income or disadvantaged taxpayers, in my view, is a bit overstated because a lot of research outside the tax arena notes the challenges that lower income individuals face in exercising formal rights. And so at times, formal statutorily protected rights and the remedies that are attached to them outside the tax arena are oftentimes illusory due to the challenges in accessing the legal system that many individuals face. But there has been little external pressure on the IRS to collect and report on efforts to comply with and address basic rights. And I think that one of the way for the IRS, one of the way to emphasize taxpayer rights is for the IRS to release information relating to its compliance with those rights. And, for example, does a specific process sufficiently allow for a taxpayer to challenge an IRS position? Is it likely that the IRS approach will lead to outcomes where the taxpayer may in fact not wind up owing the correct amount of tax? Does the approach taken sufficiently protect taxpayers' rights to privacy? And I think one of the more significant aspects of this most recent annual report that was released earlier this year from the National Taxpayer Advocate was the release of what was the first annual taxpayer rights assessment, which Alice mentioned as well earlier today. And I think it's a great idea. It is a way to document and emphasize the compliance with respect to the rights which are now part and parcel of our tax law. And I think in my view, the absence of a remedy does not mean there are no other ways to encourage good agency practice. And so the ways that agencies interact with regulated parties outside the tax system, again, in non-tax research, strongly suggest that softer notions like employee training and mission statements that specifically address aspirational conduct can have a significant impact on the way that agencies interact with individuals. And no doubt, transparency surrounding agency performance with respect to rights is a trend which I think can produce significantly positive benefits. So I think I'm going to stop there and save some comments on the compliance side if questions do arise.
That's great. I just want to say that actually this was the third taxpayer rights report card, except nobody noticed it in the other 2 years. So this is great that people are talking about it. So I want to open this up to the floor, but I do have a few questions of the panel first that we weren't able to get to in the normal course of things. And I do want to go back to Michael because he teased us with the discussion of, communicating through digital means rather than through the traditional letters, et cetera. So I'd like you to sort of talk about some of the work and what you've been finding in that.
So if anyone wants a good summary of this, there's a book by Shlomo Bernatzi called The Smarter Screen, which summarizes it all quite nicely. But some things that may be useful. We ran some trials which were focused on slightly different behavior. It was around signing up for a public health campaign, and we found things like the more complex website was doing worse in terms of sign-ups. So we ran 24 different variants of the website, persuasive messages, images, this kind of rotating carousel of images, which we didn't want, but we got anyway. Turns out the rotating carousel of images actively reduced sign-ups. There was some kind of distraction effect going on. And in fact, apparently, just don't have a carousel of images in your website. It just doesn't work in any instance. There appears to be some kind of U-shape where if your website is too simple, it's often counterproductive, and too complex, it's counterproductive. There's also some research that people deal with information differently online, so they think relatively fast in screens in terms of they pay less attention to information and their recall is poorer than with printed word. So worth remembering that. There's some interesting evidence that people are more honest when giving information online. This is compared to face-to-face. So things like drinking alcohol consumption, you report more, and we assume more accurately, when this is done via text message than an in-person interview, even though text message has written evidence of what you're doing. And the sense of this because of the anonymity and impersonality of a screen. So that's an interesting thing to bear in mind. And then finally some other things like there's some fascinating experiments run in the UK around hospital choice. Again, it's an analogy, but this is work by Barbara Fazzola at the London School of Economics, showing things like actually the quality of the hospital, the quality indicator, was less important than where it was on the screen. So basically, you either default to the middle, or if there is no middle option, like a 2x2 matrix, you'll default to the top left-hand screen if you read left to right and top to bottom. So we use these kind of shortcuts, and these can be more powerful than the actual information. Things like this, I think, worth bearing in mind, because they will be influencing behavior.
So the other question that I had, and this is really for the entire panel, we sort of talked about it, someone asked about this morning, how do you, in another context, how do you get the tax administrator or the tax agency to adopt some of these approaches, buy into some of the work that Michael's doing or the research that you all are doing? And so I just want to throw it out to the panel for the experience that they've had or what they found would be successful. I mean, doing research is great, but how do you get it, once you've got that those findings, to put them into real-life practice? Anyone?
I think at the moment it very much depends on single persons like you who are interested in research and then ask researchers to contribute. And I think a problem is there really in terms of mentality. And maybe this is related to the fact that tax administrations are governmental agencies, and I think this is a problem that many public or government agencies are confronted with, that there's not a lot of flexibility, and in order to draw new research, there must be some openness, I guess, and a way of going there would be, to open up the structure and allow for a change, probably.
I suggest spend some time, if you're from the perspective of researcher, spend some time understanding where people in the tax authority are coming from. Show how what you're proposing will actually advance their interests, fulfill corporate objectives in some way, because that's what people respond to. They're often guided by that in terms of their superiors, having been a tax official myself. Second thing is maybe you have some input from current tax officials here who have more experience than me. Second thing would be find someone in the system who's at the right level. And what I mean by that is they have enough, they're not so senior that they no longer have a sense of how things work. I will leave that comment there. What I mean by it is a slightly different way. They have a day-to-day engagement with current activities that enable you to try something out in practice. I've made that slightly more elegant. But at the same time, they're senior enough so that they can provide some cover and they can oversee a system and give you the ability to try something out. So I think finding the right level in organization is very important.
Matthias, you've talked about evaluation, so I would think that that's very important to show the agency literally what the results are.
Yeah, of course, I agree. And I mean, of course, for the first mover, it's always a bit more difficult than for those to follow. And one study that we did not find the time to discuss here is currently in the pipeline with the Taxpayer Advocate Service, where we are looking at the implications of taxpayer services, not only on taxpayers' attitudes towards the IRS, but also on taxpayers' compliance behavior. And if by looking into that data, we'll come to the conclusion that providing services actually has positive revenue effects, then I think this might be a valid argument for further research in that respect.
Right. I do think that as we've those of us who have administered the tax system, find that when you start talking about taxpayer service, people come back and say, well, you can't calculate the return on investment, but you can, if you do an audit, you can show the dollars that they attribute or the collection activities, which I've always hated. And since I can't get anybody else to do it, we're doing it. We're going to measure it ourselves. I see, yes, Hank. Microphone, wait.
Thanks. I think that everybody who is active in a tax profession, from the Director General of the Tax Authority to the commercial tax consultant, should every now and then do voluntary work as a tax preparer for low SES. Because that's the way you start to realize that there is nothing as difficult as taxes for a considerable portion of our population. I have to admit that I didn't do that voluntary work for some time now, but when I did this in the 90s, I had a client who said, oh yes, I have this letter and they say I have to pay interest if I don't pay my tax obligations for the end of the month. I think I choose paying interest. That must be in my interest.
Yes, Elaine, oh, okay. Where you go?
So Nina, I'd just like to build on Michael's point, actually. I think the way to convince our colleagues to listen to the voice of the customer is to have some really compelling case studies. So the kind of test and learn that you exhibited is the kind of evidence I take to the board of HM Revenue and Customs, because I have the evidence to prove that if you listen to the customer and if you act in accordance with their needs and what the behavioural insight shows to you, you can demonstrate that it's much more efficient for the tax system, and the lever that most tax authorities are interested in is the yield. So if you can demonstrate through a whole range of tests and pilots that if you approach collection in a particular way, that it will be faster and you will get more yield, then that is the lever that you need. I think I'm really interested to explore with anybody here who's managed to simplify a tax system, because it's easy to say, but generally there are losers if you simplify a tax system. And, you know, the world of politics means it can be really hard to take away reliefs, which are often the things that make a tax system complicated. So I think what we're usually left with is trying to explain as simply as possible the rather complex system we've got. So if there is anyone who can share experience in communicating a complex tax system in a way which is easy, I'd really love to hear from them, because I think, sadly, that is the difficulty we are often left with.
There was one year in my annual report where we periodically make the complexity of the Internal Revenue Code the #1 most serious problem for the IRS, for taxpayers, for everybody. And there was one year where we basically did a quantification of, you know, various special provisions running through the code. And I was so tired of hearing people say, well, it's the special interests. And of course, the calculation was that the special interests were us, that, you know, where most of those expenditures through the code were in the United States was for people like me and others, not the fabulously wealthy, that's where the money is in the system. And I think a little honesty on that line. Now, nobody wanted to hear what I said on that line because it meant they would lose their mortgage interest deduction or things like that. But that was the truth. I don't know, truth doesn't have an ascendancy these days. So. Over here, we have people. Oh, okay, you've got one, then we'll go over to that side of the room.
So I just want to follow up. It's interesting, some of the incongruity between what Elaine was just saying and one of the points that Les made, which in talking about compliance in terms of collections and yield and statistics along those lines, then you compare that with what Les was saying about needing to, when you have a tax agency that's administering social welfare benefits, hiring people who recognize the special needs of that population and the goals of those programs to alleviate poverty, as opposed to collections and yield and things like that. You know, one of the things that I've been thinking about a lot recently, as you know, Nina, is the idea that perhaps a revenue agency is not culturally oriented toward administering anti-poverty programs, and maybe we ought to think about spinning off some of those functions when they get to be too large. As the earned income tax credit has gotten to be so large, as Les's statistics point out. So I always find it interesting to come to these panels and hear people talking about collections and yield and return on investment and things like that, and then you juxtapose that with the discussion about anti-poverty programs and tax expenditures. Tax system.
My answer is I can remember going to Sweden and meeting with the Swedish Enforcement Agency, which at that time collected the tax and other debts owed to the Swedish government, and I was sitting opposite the chief of the enforcement agency as he described the positions that the debtors we're in and the lifelong cycle of debt, as he got close to tears, and I thought, this is the kind of collection person that I think we need to have, that you have all the power in the world, but you can also have empathy and appropriately apply it. And I think that doing that, go ahead.
Yeah, no, I was just going to say, and building on that, I think the way in which the IRS has administered our earned income tax credit, for example, has been to emphasize depersonalized communication and automated correspondence and a removal of any kind of human being from the process. And so the way that it's situated is it lends itself to there being no understanding or little understanding of the circumstances of the individual who is forced to confront that apparatus. And so whether it be spun off and whether that's necessary or even there's lots of incremental changes which could help that process.
So over here, we have lots of people over here. We need okay, you're the last one on this side. We have to be even-handed here.
So you were asking about real-life examples of nudging. I'm from Canada Revenue Agency and embarked on nudging for a little while. I'll give you just an example of nudges to professionals for unreported income. So we started with the soft nudge. Maybe you forgot to tell us about something that income you received and you didn't declare, and we had no pickup whatsoever. Nobody, kind of came clean. So we sent a second letter, which was a little bit more forceful, and saying that we knew that they had not reported all their income, and we were offering for them to come and see us before we went and saw them. And we had very little pickup on that nudge. And then we send a third letter to say, we're coming in, we're going to audit you. We know you've undeclared so much income. Again, you have a chance to talk to us before we impose penalties. And unfortunately, we didn't have good pickup either.
That's interesting.
The nudging did not work with that type of population, which was a knowledgeable taxpayer population. So that's just like real life example.
Yeah, that's very interesting. All right, let's go over here now. And
I've got the microphone, so I'll go first.
all right, he's taking it over.
Yes. A question for Les, but also for Nina, if you want to chime in. On a completely subjective scale of 1 to 100, how big a problem is fraud in the EITC program? Is it that type of thing that really keeps you up at night? Should the agency's resources be better spent, going after 482 compliance or going after hedge fund guys? Or are they trying to make the system more regressive than it already is? Those thoughts go through your mind at all?
I think that there's very little good research on the underlying nature of errors in terms of contributing to whether it's complexity, misunderstanding. My sense is that, as with any particular and complex provision such as the earned income tax credit, there are kind of substrata of compliance issues, some of which are more likely attributable to fraud and less likely to be attributable to misunderstanding. For example, there is there are income reporting or misreporting issues that tend to spin off of some segments of self-employed taxpayers where there may be a greater likelihood of intentional error as compared to family status, where the research in the U.S. shows that the dynamics of American family life are changing significantly. So the Ozzie and Harriet, I'm dating myself, family is no longer the case.
Leave it to Beaver.
It's a mixed and intergenerational household, and so establishing eligibility for family status benefits is challenging in our current circumstances. So my sense is there's much less fraud in when there are errors around qualifying children as compared to income, but I think that there is, and I might also add, there's the separate issue of third-party return preparers who oftentimes either facilitate or turn a blind eye, and that is a whole separate issue which suggests an approach which would encourage greater oversight over those preparers, which could play, I think, a significant role in addressing the problem.
A few years ago, I mean, this is maybe 10 years ago, the IRS audit function for a period of time asked the auditors in the earned income credit, doing audits of earned income credit, whether they thought the taxpayers' errors were unintentional or evasion. And the auditors themselves said that 97% of the audits were unintentional and only 3% were evasion. The IRS never published those numbers, didn't like them at all, and we published them. But
yeah, and I'll just kind of add the part that I didn't quite get to in the main talk was the impact, the relationship of budget issues to this is that there is a significant emphasis, I think, in the near term on rooting out improper payments and fraud across the government. And to the extent that the earned income tax credit and refundable credit compliance problem is painted with a broad brush as fraud, I think there's a real risk of a significant retrenchment in the benefits that are administered, including a reduction in benefits among non-traditional families. So there have been some recent proposals that would remove the ability for a family member who doesn't have a legal relationship with the child. And I think that is part and parcel of this notion that taxpayers are cheaters, and we need to do something about that.
next, over there. Yes, sir.
Yes. If everybody is agreed that simplicity is a value, the paradox is why each day the tax system is more complex. Perhaps it's the comparison between losers and winners. Sebastian has said us that low-income taxpayers are clearly losers with complexity. But tax officers are winners because they have probably they would have much more notice of deficiency and penalties to set up. Tax practitioners are winners because they would have much more clients. Tax professors could be winners because we have much more things like PEPs to explain and to write about and to research. And tax publishers would be winners because they have much more researchers to publish. So at the side of winners, there are much more people than at the side of losers. Just the opposite. At the side of losers, are much more people than at the side of winners.
Yeah, you're certainly right. And I also wanted to add to your point, complexity has a distributional impact, and I think this is the main message. It's very clear that you cannot have a simple tax system because we want to have a fair tax system. But I think one should be aware that there are losers and winners and take measures in order to get this kind of tax framework that we actually want to have, and not neglect the complexity and its effects on distributional issues.
I don't know where our mic is.
Thank you. I have a related comment on the complexity of the tax system.
Can you hold it closer to you, please?
Yes. It is a related comment on the complexity of the tax system and the complexity or simplification of the language of the rules. So probably we should agree that it is impossible to simplify the tax system because the economic life is becoming more complicated. But there is also a danger of oversimplifying the language, and this is the notion of the complexity in the tax law literature, where because the IRS and other tax authorities are required to explain the rules in the plainest possible language, this plain, clear explanation may disguise the actual complexity of the tax system. And then this also has the negative distributional consequences, because you can imagine that a low-income taxpayer who cannot afford an expensive tax advisor will be misled by these plain, simple rules, and this will lead to unintended non-compliance, whereas the wealthier taxpayers who can afford pay tax advisor, who will know more than this plain language suggests about the tax rules, and as a result, it will be the low-income taxpayers who will be led into this non-compliance by this complexity phenomenon. Thank you.
Yep.
I was just going to comment on the simplicity factor. The reality is some of it is also choices that taxpayers make too. Every time, I think, at least in the Australian experience, where there's been a choice between certainty or a better outcome, taxpayers have often chosen that over a reduction in complexity. For example, when the tax consolidation was introduced in Australia, there were 4 different methods how you could consolidate. And at the time I worked for a firm, and just about every client that came in wanted you to try all 4 methods to see which one gave the best results. Nobody went for the simple method. So part of it is also, at the small end of town, we have something called the capital gains tax concession. Again, it's for small business, but there are a number of ways of getting into it. So part of it, I think, is basically people are always going to choose a better outcome over simplicity. Maybe that's extreme, maybe not all, but in my experience, most have made that choice. Secondly, there is a distrust between revenue agencies and the tax profession, such that, and I think the US has followed this route, and I think Australia is increasingly moving that way, where everything is legislated. Because the tax authorities are worried that if something's in the grey, that it will be exploited by the profession or by taxpayers. And taxpayers, on the other hand, feel as if there is a grey area, then the revenue agency will try to squeeze the maximum out of it. So, I mean, that trust deficit needs to be addressed. So I think it's the combination of these 2 issues. I mean, the last time we had a go at simplifying the Australian tax system, there was a rewrite project. It's never been completed. And we have 2 different tax acts, one in the old language, one in the new language, and not all of the provisions have been. And also, when you do a rewrite, of course, it's not supposed to change meaning, but how can you change the words and yet maintain the entirety of the existing meaning? So I think that's kind of a fact we need to bear in mind when we embark on simplicity, the move towards simplicity.
Okay, so we had Eric, and then we'll do Diana, and then I think we close.
Well, 2 short questions. The first one to Michael. I'm quite impressed by the fact that a simple sentence can change behavior so much. Do you have any insight so far about the enduring effects of this nudging of taxpayers? And the second question is more a thought about complexity and what we might mean about when we talk about complexity and the heterogeneous predictions on compliance and results which we find. Shouldn't we be very clear about what we mean when we talk about complexity? Is it difficulty with a correct solution, or do we talk about ambiguity? Right. And this ambiguity, what drives taxpayers and practitioners to go to the border of legitimacy and even over the border, because you can argue there's room for interpretation.
Okay, so Diana.
Thank
no,
you,
Michael,
Nina.
you were going to say something. Yes, I'm sorry.
Excuse me.
Yeah, he wanted to answer the question.
I mean, we can distinguish between the duration of the effects and the effects of repeated exposure. So in terms of duration, I showed you 3 months duration there, where the effects are sustained. That's, at some point, you can't follow it much longer because certain actions take over. I have seen also some decay of effect over time, so that by 70 days, in some instances, the other groups have caught up. But we now increasingly work internationally, so we've done a lot of work with the World Bank in, for example, Guatemala. In the UK, it's more difficult to track over time because of the churn between. So you imagine you sent 17 different letters, and then the people don't come back the following year. It gets quite complicated. In Guatemala, we did find that the year later, people who'd received reminder letters with certain messages in, some relating to national pride, interestingly, some actually social norms, so we replicated the result. A year on, we saw increased compliance from those people, on-time compliance. So it appears there was an enduring shift in those instances. It varies, though, frankly. It does vary according to the message and the context. We've seen it go both ways.
Thank you, Nina. Congratulations to the panel. talking about how to improve the quality of the service of the tax administration, I would like to share with you that recently in Mexico, taxpayers acquire a new legal obligation in order to fill monthly online their accounting, their corporative accounting online, accounts online. Do you think that this is a correct tool in order to achieve better compliance, in order to improve the rights of the taxpayers? Thank you.
The online, so they have to do, what do they have to do online?
They have to fill monthly online their accounting, their corporate accounts online.
Okay.
Monthly. They have to fill all their accounts online and send to the tax administration each month. A lot of taxpayers in Mexico challenged that decision in the Supreme Court of Justice, but the Supreme Court resolved that it was the correct way to pay, to disclose the tax status of the taxpayers on time. It's a disclosure on time. What do you think about it? Do you think we are so aggressive in Mexico, or do you think it's okay for the taxpayer rights and in order to have a better compliance? Thank you.
Anybody want to comment on that?
Yeah, just a quick.
How's it going? Is the
I was just going to say, that's exactly my question.
Okay.
I think just a quick response. I think first, of course, this introduces a lot of compliance costs probably, so people won't like the idea of having to spend a lot of time doing this. But I think what might also be true is that doing something regularly makes you better at doing it. And if the outcome is people get a better understanding of what they're supposed to do and how the rules actually work, I think this might be a positive outcome. So the big thing, of course, always is get it right. And I think it's hard to draw a line, if quarterly filing is better than monthly filing. But I think if you say that the outcomes are good, why not?
So we have now come to the end of our first day. And, well, not quite, because in 10 minutes or less, we will be doing a fireside chat, which is, I don't have the location for it. I think it's in the library, it's in the, where we were last night, is that correct? It's right here. Oh, excellent, so you don't have to go anywhere. And then, so I hope you'll stay for that. And then if you're coming for dinner, the meeting time is 1910 or 7:10 for those of us on the other side of the pond, at the Campus West entrance close to the Austria Trend Hotel. So I want to thank this wonderful panel. I want to thank this wonderful group of people, all of you staying.